Hello and welcome to Risk and Revolution. I'm Ivi Amira and with me Mike Gulam, my dear friend. Hey Mike,
Hey, Evie, how are you, brother?
I'm doing great, especially now.
Yeah.
Today we are going to join by Rick from Hippo, the chairman and CEO of Hippo, a company that from day one tried to rethink what homeowners insurance could actually be, and of course founded by Asaf One, a dear Israeli friend. What do you have to say about our
Oh,
episode to come?
it's a great episode. Encourage everybody to dive in and hear from Rick. Obviously, I have a little bit of experience with the Hippo team and have had the opportunity to work with and for Rick for a number of years during my time at Hippo. But we have a really great conversation about Rick's career journey throughout the insurance life cycle, where his career started, what took him into Hippo, starting his own company and becoming the president and CEO, and kind of working through the transition of Hippo. I predated Rick at Hippo. I'll throw that out there. But it's an incredible conversation. It's really incredible to hear the story of what it's been like for him to transition that company into a public entity and a publicly traded insurtech and the success that was there. And just a nice, honest back and forth conversation. Rick is a straight shooter and shares some really great insights that I think are super useful for people to hear.
What I personally loved about this conversation was how naturally it moved to into the topic of prevention, because basically Hebo have a lot of use cases, prevention use cases, and not
Yep.
as a buzzwords as a philosophy around the prevention insurance.
Yeah, absolutely. And I think this is one of the things, Evie, that you and I have always,
Right.
talked about focusing on with Risk and Revolution, right? Is, having our guests give an opportunity to have an open mic to talk about the things that they're working on and the things that they think are impacting the industry and how we're actually revolutionizing something that has been around for a very long time. Rick is a super intelligent person. He's been around the industry his whole career, pretty much right out of college, grew up in an insurance family. So, it's really interesting to hear his perspective on things that we tried to do at Hippo, some things that worked, some things that didn't, and the direction that they've taken since. And then also, I think his thoughts on the future, right? We get into an AI discussion and other kinds of things about where the industry is going, which I think people will find super enlightening and very interesting.
So, without further ado, let's jump in.
Awesome.
Awesome.
I am super excited for the first edition of the Risk and Revolution podcast. Here with a old friend, mentor, and now current CEO and president of Hippo Insurance, Rick McCathron. Rick, welcome to the show.
Mike, thanks for having me. Lots of fun.
Yeah, this is great, man. Super appreciate you being here. I know we got many stories that you and I could probably talk about from our days together at Hippo, but I know a lot about you, but some of our listeners obviously don't. Would love for you to take us back to the beginning, man. Like, where did you start your insurance career? What was your first job in insurance?
Oh man, this is going way back, right? This is many moons ago. But interestingly, I grew up in an insurance agency family. So my stepfather had an agency in Southern California, and I started stuffing comparative quotes in envelopes and mailing it out as a direct mail campaign to local prospective customers. So 13, 14 years old, I was already understanding what some of the pricing differences were, predominantly in the auto insurance line, but a little bit in the homeowners insurance line. So, yeah, licking envelopes and stuffing letters and sealing them up. That was my first job in the insurance industry.
That's awesome, man. Like that is definitely the ground floor culture, man. Like just starting out at the bottom and working your way up, which I love asking that question to folks, especially folks who are in leadership positions, because I almost feel like every senior leader I meet in the insurance industry started off at the lowest rungs of insurance. Like they worked on the ground floor. How about school? When you went to college, were you an insurance major? Did you go to school to study insurance?
So I was not an insurance major, although I did anticipate getting into the insurance industry when I graduated. So I was a finance major. and had a minor in history. History because I loved it, and finance because I knew I needed a job when I got out of college.
That's great.
But I did have in sort of an inkling that I was going to get into the insurance industry, although not on the distribution side, more on the underwriting side. And because that always was interesting to me. To me, back then, when you were a personal lines underwriter, that was like a career position. Like, most of my peers in those early years were people that were in their, 50s and 60s that had been career personal lines underwriters. And so I knew I wanted to get into insurance because I had that family background, but ultimately more on the carrier side as opposed to the distribution side.
Yeah, yeah, that's awesome. Well, I mean, that's a great segue, actually. So I would love your perspective, as also being somebody who started my career in insurance in the underwriting space and worked with similar people. How have you seen that evolve now in today's kind of modern insurance carrier, modern MGA, like the role of an underwriter in that space?
Yeah, look, I think it's completely pivoted. If you think about risk selection back then, first of all, this was a day and age where, the applications were handwritten on paper. They were mailed by the agent to the
Yep.
insurance carrier. The agent had 7-day binding authority. So you essentially had 7 days to review it as the carrier and then decide, did you want to send notice of cancellation? Or rescind the policy if there was something on there that was really, really scary, or did you want to accept the policy? So everything just, handled differently. But the process for us, and back in the day, I worked at Mercury Insurance Group in Southern California. The process was the applications would come in, the underwriting branch manager would review a cursory review of every auto insurance application, then assign it to an underwriter. The underwriter then would underwrite, which included pricing, by the way, because as much as I hate to admit it, we didn't have comparative rating tools or PCs. It was green screen terminal where you had to actually manually rate a lot of the different aspects
Yep.
of the policy.
You had an
Then
old school pro
determine
rata wheel. You remember
that's
those?
right. You
Oh,
get your Romco wheel, right? Pro rate, short rate, like all of these kinds of things. Figure out what you wanted to charge for it. Go through that entire process. And every single auto insurance application probably went through 30 to 45 minutes of individual account underwriting. If you fast forward that to today, it's the exact opposite. There's almost no manual underwriting in simplistic lines like auto insurance or homeowners insurance. It's mostly done from an acceptability perspective at the aggregate level. What are the risk profiles that you want, not want? Straight through process underwriting. So the work has shifted from more of an individual underwriting perspective to more of an aggregate or portfolio underwriting perspective, which is different, but still a lot of fun. And I know I just said that, but a lot of fun.
yeah, yeah. Oh, underwriting's always fun, man. I've always said that underwriters are like the junk drawer of insurance, and it's the greatest spot to be. You get to touch everything. I always say insurance makes money off of underwriting profit. So obviously the underwriters still have a pretty key role. So Rick, I'd love to jump into kind of the MGA and MGA structure. Like I know your career, obviously, having worked with you in the past, and you obviously have a very unique perspective on your time at Mercury, coming to Hippo. You founded and started First Connect as an auto MGA. Would be curious, like your thought perspective on how MGAs have evolved into what we see now because of technology. Like we'll jump into AI data and technology a little bit later, but would love your perspective on just the evolution of the MGA throughout your career and how much it's changed, especially probably in the last 10 years.
Yeah, it's interesting. I think I run into a lot of people that they talk about MGAs as sort of a newer phenomenon, something that's been going on the last 10, 15, 20 years. And the reality is, MGAs have been in business for a long, long time. And so if I go all the way back, the earliest parts of my career, so 33, 34, 35 years ago, there were MGAs out there in which balance sheets needed to put their dollars at risk, but not handling any of the actual aspects of how you manage a portfolio of business. And so, this is before ILS was a thing where people could invest in insurance-linked securities to get into insurance as an investment. A lot of these balance sheets, what they essentially had to do is say, look, we need to find people that can process, that can issue policies, distribute policies, handle billings, all of these different aspects, underwriting claims, and essentially create a mechanism by which we can get products to market. And that was a bit in the auto insurance space. There were a lot of those players out there in what I would say would be like the late 80s, early 90s. And then there were always, of course, a lot of specialty MGAs that were doing things that the big carriers didn't do. Over time, as you get into sort of the 2000s and the 2010s, most of the large carriers sort of started underwriting a broad spectrum of different policies and different types of policies. And so as they started doing that, they sort of displaced some of the traditional MGAs, and it wouldn't be uncommon for, large insurance company to have 15, 20, 30 different product lines that they were underwriting. Well, then started what happening was I think the market and the carriers realized it's kind of hard to be all things to all people, trying to create 15, 20, 30 different programs under your name, underwrite them properly, handle the claims properly, make sure the pricing is there, handle all the technology that is necessary to support those policies from a policy admin perspective. All of these different components. Ultimately, what happened is they said, look, let's get out of this business. Like it's too nichey, it's too small, it's not worth it. We don't have the expertise. That started to happen about the same time the insurtech revolution started to happen, where you got really smart guys that decided, look, I can do a better job in home or auto or small business than some of the legacy carriers that are dabbling in pieces of this business. So they wanted to start their own product, their own MGA at a time where some of the other carriers were kind of getting out of different aspects of business. So that was kind of the insurtech revolution, sort of 1.0, where you get companies like Hippo, like Root, like Lemonade that were really starting to grow in these particular areas. Technology became cheaper, became more readily available. You could actually build your own tech stack without having to build some old legacy COBOL system. You could use a claims TPA or spin up your own TPA organization. You generally had a much better user experience and user interface to make customers want to come over to you. And so that started to really foster this growth mindset of MGAs. And then as you continue to go down that path, the MGA started to realize, well, growth is one thing, but profitability is paramount. So then they started to realize, well, we need to make sure we have really smart insurance people that understand how to actually have a portfolio of profitable business. And that's why guys like you, Mike, and others, it sort of got into the insurtech. Legacy insurance people that understood things like underwriting, claims handling, rate making, got into the insurtech world, sort of matured the insurtech organizations. Ultimately, where we fast forward today, you've got MGAs that have strong underwriting profitability, that are continuing to grow, that specialize in various aspects of insurance. And that's just growing like crazy over the last, I would say, 5 to 10 years, and will likely continue for many years to come.
Yeah, it's a great point on the loss side and profitability, right? I mean, it's so funny. I have people ask me this all the time, especially having come out of Hippo and everything that we went through, and they're like, "Well, what do you think about where the insurtech industry is now?" And it's like, well, if you look at where everybody is today, if you came out of the insurance industry, that 7 to 10 year trajectory makes sense. Like most people, it takes a while to build up enough float so that you can cover losses and actually have your loss ratios start to make sense over time. Diversify your book, understand who your customers are, who your customers aren't. So it's a good point. Let's take a quick step back though, because you talked a little bit about Hippo, and would love go back to the early days of you pivoting from your First Connect relationship and what you were building on First Connect here in Texas, and kind of what What drove you to make that choice to jump into InsurTech when you did? I remember it. I remember the day you flew out to California, and I was like, "Who's this guy?" I will say to all the listeners, I predated Rick McCathron at Hippo, but that's all right. Everybody thought I was Rick. They were like, "Oh, are you this great insurance guy?" I was like, "No, that's Rick McCathron. That's not me. That's not me."
Well, well, I don't know about that, but what I do know is I was easily manipulated by a master salesman.
We
For
all were,
those of
man.
you that
We all
might be
were.
listening, our founder at Hippo, Asaf Wan, is just an incredibly charismatic individual, like a visionary, strong leadership capabilities, and I flew out. My reinsurance broker suggested that I meet Asaf for under the spirit of partnership, and I thought, well. I do homeowners, or excuse me, he's going to do homeowners insurance. I do auto insurance. And so it makes sense that we cross sell each other's products over time. So that was the reason I got on the plane. So as you mentioned, flew out, met in the Hippo office in Mountain View, California. It was above a restaurant there on sort of Main Street, Mountain View, and in Castro actually. And the 1 hour meeting turned into a multi-hour meeting. And as I was getting ready to leave, Asaf was like, Rick, I know you've got your own company, but I need somebody to partner with me on the insurance side. How about you leave First Connect and you come over and join me at Hippo? And I said yes on the spot. And the entire flight home, I was like, what the heck did I just get myself into? Like, what did I just agree to? But even back then, the excitement of doing something different in the insurance industry is something that I really wanted to be involved in. And same with you, Mike. I know that like you leaving, Esurance and some of the things that you had done previously, like to do things different. You were already ahead of me on the track of getting outside traditional insurance to do other things. But it really was a lot of fun. It was a lot of risk. It's less risky now because insurtech companies have a blend between strong insurance people
Right.
and strong technologists. But it was a leap, and it was a leap of faith. And I was to the point in my career where I said, look, if I go out, I want to go out doing something in a big, bold way and do it in a way that I can be proud of and say I was there when we built it. And that's something that you should be proud of and something that rest of the Hippo should be proud of.
Yeah, that's awesome, Rick. That's awesome. Yeah, I mean it's crazy to think back how long ago that was now, right? I mean, it's coming up on 10 years next year that I would have joined Hippo. I know about the same for you back in the day. Curious the evolution you've seen, obviously, bridging from being a private VC funded startup to now a public company. I know you've obviously been there since the beginning, so you've seen the full evolution. Would love to understand from you a bit more on the evolution of kind of AI and data and how much that has changed. Because in the early days, it was really around data, right? The AI wasn't there yet, the machine learning wasn't there yet. It was about new access to data sites, insights. Now we've kind of shifted into this model of AI can do a lot, right? It's not the holy grail that I think everybody thinks it is. Like we could talk about that, but curious your perspective on how much that kind of impacts the company today versus what it was like 5 or now almost 10 years ago.
Yeah, if you really, I think that's exactly right. The difference in the separation between data and AI are pretty important from my perspective. So now you can't have AI unless you have strong data,
Yep.
strong, accurate data infrastructure in which you can use the machine learning tools to go in, take that data and do whatever you anticipate or what you desire to do with it. That is sort of that foundational piece that is necessary. And I think insurtech companies did a pretty good job of getting data from a whole host of sources. Like I remember one of the early, the early quote processes we had at Hippo was all we needed was name, address, and date of birth to provide a bindable homeowners and insurance quote. And I remember the traditional underwriters and legacy people saying, well, how can you get accurate information by asking only three questions? You clearly aren't going to have enough information to properly price a risk. And our response, you remember this, Mike, our response was, oh, I get the same 70 questions asked and answered that you get. I just get them through verifiable third-party data sources and oftentimes multiple sources where I can triangulate the truth if there's some variance in what that truth may be. That sort of early stage uses of data from multiple sources to create your own proprietary knowledge base is critical to get AI effective. Now enter the days of AI. I do think there's a lot going on, obviously. I think there's a lot that are sort of vanity projects, to be completely transparent. Like everybody talks about all the different AI that they're doing. Look at all the AI startups. Look at all the AI startup claims TPAs as an example. Some of them look very good and very promising, but they, at least those have a use case. We are going to bring AI into a better claims experience. There's a lot that don't have a use case. They're actually just looking, they've got AI and they're trying to plug it into that round, peg into that square hole without really understanding what they're trying to achieve. So I think the first thing that's most important is first have a problem to solve, then determine how you can use AI to help accelerate solving that problem, and start with a problem and a solution, expand it, new problem, new solution, expand it, then start piecing those different problems that you solve for together to get more machine learning capabilities out of it and grow it from there, almost like a honeycomb, as
Yeah.
opposed to, just saying, we're just going to throw all the AI solutions up against the wall and see what sticks. That's a recipe for disaster.
Yeah, I could see the claims use case. I'll tell you, for me, the piece I struggle with is the underwriting use case. Would be curious your perspective on this from a compliant end, right? I mean, I know you've been an underwriter for a long time. I've been deposed, I've been on the stand before in lawsuits around insurance claims, and my concern is around the AI decision making that's happening from an underwriting perspective. That is even the whole, it'll take it 70% of the way and then the human takes over. But the human's not looking at that first 70%. They're just assuming that what came out of the first 70% is accurate, and then they're making a decision at the end. I'd be curious your thoughts on kind of the regulatory environment of when some of these AI cases hit courts over claims and over underwriting decisions, how the regulators are going to react to these types of things.
Yeah, it's Mike, it's a good question. I think the key is you need to have the right level of checks and balances across the entire process. And so, one, I think we are far away from a day in which you don't have underwriters, and far away from a day in which you don't have humans making the ultimate decisions and creating the ultimate sort of risk profile, acceptable risk profile. So I think we're still pretty far away from that. Now, not that AI can't do it, I just don't think AI will do it properly in the short run.
Yeah.
So I think the question is, okay, what about the amount of data or work that a human is currently doing? Can you automate? And it's just another version of automation. Can you automate that process in a way that learns in an accelerated rate or accelerated fashion? We were actually having this conversation internally about AI agents for some of our customer service functions. And just like human agents, AI agents will make mistakes. The
Yeah.
trick is if you correct it, you need to, lack of a better term, audit it, monitor it, listen to all the responses, make the corrections. Once you make those corrections, you only need to make them once. And for that particular case, you don't have to retrain and retrain and retrain. So I think if companies look at an AI agent or an AI underwriter or an AI support representative as almost like we need to educate them just as we would a human doing these particular features, then I think we generally have a better outcome than if we just again throw it against the wall and see what sticks. It's a gradual process. At the end of the day, one thing that's really important to me at Hippo is utilizing AI not only benefit the insurance company, and that's what a lot of insurance companies are doing. How can AI benefit them? I
Yeah.
actually think we need to put that on its ear and say, how can AI actually benefit the customer? How can we make the customer's life easier, more accurate? How do we make sure they have proper coverage? How do we make sure they're getting the right discounts? How do we make sure they're being charged the right premium? If we have a customer-centric mindset, I think that helps the regulator a lot get more comfortable other than just we're using it to deny claims or we're using it to reject a policy or non-renew. You got to have that customer-centric mindset, and then I think things generally work out.
Yeah, that's well said. That's well said. And you actually don't hear that a lot, especially in the insurance space, about using AI to help the customer journey, right? It's always about claims, it's about underwriting, it's about efficiencies and expense ratios, and nothing about how do we use this to, to better the consumer relationship that we have as a company, right? I mean, I think people oftentimes forget that AI is a tool, right? It's a tool that's used by carriers. It's also a tool that's going to be used by customers, right? I mean, there's a whole flip side to this of how consumers are going to use AI to come back at the insurance company. And I use this against claims companies all the time. Do you see a risk there in AI being the exact opposite and being used against the insurance industry as a whole?
Yeah, I do, but I think your question was the right one, right? It is a tool. How do you make sure the tool is being used properly? If you're a hammer, everything looks like a nail.
Yep.
So the trick here is to make sure you understand if the tool is the hammer, you understand what is it used for. If you have a different project or a different task, the tool is not the hammer, you use something else. And I think that's going to be critical in this is to make sure we understand all of the different permutations of how it can be used, pro, con, in favor of companies, against companies, all of these different aspects of it. Because again, if I look at it from a consumer perspective, if there's the more fraud that's in the industry that AI helps support or induce, that actually raises the rates of our customers and reduces sort of the coverages we can provide customers. It's kind of like, if I go way back in my career, I worked in a company where they were very, very much micromanaged employees, this particular company. And it was very much about let's make sure there's very little latitude. So, you have to take your break at this time, you have to take your lunch at this time. So at one point I asked, I'm like, why do we micromanage our employees? And it was always the same answer. Well, one time somebody, and my response, and I was in my 20s, my response was, well, why don't we just, penalize that one time or that one person instead of penalizing the 98% rest of us? And I think that's something that's critical here too, is you build a solution that solves for the masses. And then where there are mistakes in its usages, you correct those mistakes aggressively.
Yep. Yep. Yeah, you just clicked my underwriting brain of how many times I'm like, well, there was this one time this claim happened, and I may we used to have those conversations in the early days with the SOF and Aviat all the time. And I'm like, well, no, it's always been done this way. And then they're like, exactly. That's why we need to do it differently if it's always been done that
Yeah,
way.
you can you can have a 0% loss ratio. Now, you don't have any clients, but you can have a 0% loss ratio. And then the flip side is, you can have 1,000% loss ratio, but you're not going to last very long. And
Yep.
so really it is finding the right tools, the right mechanisms, the right capabilities to have a growing enterprise that has profitability.
Yep. Yep. Makes sense. Makes sense. So, Rick, would love to touch on before we move on, and I want to talk a little bit with you about climate. Be curious, how technology has changed for you guys over the years, right? I mean, I've been gone from Hippo now for longer than I was there, which is crazy to think about at this point. But how have you seen the technology evolve? Like I remember Hippo, like we were a technology machine back in the day, right? We had a huge tech organization. We built everything from scratch, basically. How much has that evolved since you guys have become a public company and started to expand and where you guys are at today?
Yeah, it's very similar to sort of my thoughts on what products you offer. So you're 100% correct. In the early years, we built all of our own technology. We never outsourced anything. We always built everything. Over time, we matured in realizing not everything should be built. Some things should be bought. And if it's true IP, yes, you should absolutely build it and control it. But if it's something that's more commoditized, why spend what limited resources you have? And every company, and I don't care if you're Google or Amazon, every company has limited resources. Some just have more than others, but everybody has to make choices. And
Yep.
so use those limited resources on technology that truly moves the needle, whether it's to generate more customers, to have a better loss result, to have more predictability in your earnings, to provide better customer service scores, whatever it is. for true IP, those are the types of technology you should build. So we actually use a combination now. We always run through the process. Should we buy it? Should we build it? Should we borrow it? On every piece of technology we're thinking about utilizing. And I can tell you more times than not, we've pivoted to we should buy it over the last few years than we should build it. Now, the stuff we build world-class grade. We believe that it truly is a differentiator for us, and that will not change.
Got it. Got it. Wow, that's great. I'm in that same boat now today, right? Like as a founder and of a startup, it's like, guys, we got to own the tech that's IP, that's ours, but where do we build versus where do we buy? And the limited resources obviously is a huge piece. Hopefully that's one of the things where AI helps on the tech side. I think one of the best advances I've personally seen on AI is how much assistance it gives a developer, right? The
Mhm.
tools and the way that it helps a developer write code and write code faster, where you're not putting it into your back end system, but you're allowing people to use it as a way to assist them. It's like having an assistant, right, with each one of your developers that just increases speed and efficiency.
Yeah, it's again, we've talked about this a bunch, but it's a tool. It's a
Yep.
tool to make things more efficient.
Yep.
And utilizing that properly is table stakes at this point.
Yeah, absolutely. Absolutely. Well, listen, let's pivot a little bit into climate, right? And I think as an insurance professional, right, I think we've seen climate shift more than anybody else has. Short of any political things around climate change and everything else, the insurance industry, I think, is one of the best poised groups in the world to talk about climate impact because we've looked at the data, we've paid the losses. I'd be curious your perspective, Rick, on just the climate's role in insurance now versus 20 years ago, right? Like it's just changed so much in the last 20 years. Would love to just hear kind of an open-ended perspective from you on how you kind of view climate's role on insurance.
Yeah, it is interesting, and I think I think we all have to pivot the way we think about climate. So our industry solution generally has been things like reduce coverage, deny risk, increase deductibles, put roof schedules on, all the things that are appropriate and necessary, frankly, to keep the market healthy. But the piece that gets missed in that equation is affordability.
Yep.
How can a customer afford the raising rates, the reduced coverage, the higher deductibles, the exclusions that might exist if they do have something meaningful? I was looking at a study not so long ago that looked at people that were buying new homes and what percentage of those customers would actually qualify for the loan if their insurance premium went up $100 a month, which it's not that much to go up $100 a month. The number was staggering at how many people no longer qualified for their home loan because of the affordability of insurance. And I think we have to remember that. We can't pat ourselves on the back if we're the industry and say, hey, our loss ratio is better if all we've done is pivot all that exposure to the end customer. Now, again, it is currently necessary. It's the time in which we sort of balance out what the customer pays and participates in versus what the insurance company pays and participates in. And frankly, what do some of the builders or contractors
Factors.
pay and participate in? It's a triangle that's really important for all three to get aligned. The long-term solution, though, isn't for any one of us to take a disproportionate load. It was the insurance companies taking too much load, then it went to the customers taking too much load. The contractors were out there all happy because every time, there was a loss, they got to replace or repair something.
Yep.
The real answer is how do we reduce the exposure? And the way you reduce exposure in my business is you harden homes. You make sure that your homes are hail resistive, fire resistive roofing materials, wind resistant materials built at elevation or on slope so you avoid the flood. Make sure they can withstand, a hurricane or tornado, defensible spaces, water, or completely fire resistant material. That's the long-term solution. Now, the problem is it's easier to do that at new construction,
Yeah.
but it's harder to do that in existing homes. But I tell the industry, eventually, customers are not going to be able to pay the increasing cost of insurance. Whether you're a renter or a homeowner, it doesn't matter. That cost gets passed on to you. Eventually, we're going to have to change the paradigm. And that is, I'm waiting for the new startups that actually harden homes, that make these like retrofit homes that make them more resistive to most materials. Best claims experience is the claim you never have.
Yep.
So that's what I think the industry has got to partner with contractors to build over time.
So do you think, Rick, some of the changes that are coming down from the new administration federally with all the FEMA cuts and there's a lot of fear about, oh, the government's not going to be there to backstop this, which I think is intentionally the point, right? How municipalities and others qualify for disaster relief and disaster assistance. Do you think some of those changes will hopefully trickle down and actually force this resilient mindset, which I'm 100% in agreement with you. I pitched this idea with you back in the day. I think you and I were all over the country constantly talking about the best claim experience is the one someone never had. Be proactive versus reactive. Do you see that as a positive outcome to some of the changes that we're seeing at the federal level that's kind of pushing more onus onto the state?
Yeah, I maybe. Well, I see it as an outcome. I don't know that I see it as a positive or a negative one.
Yeah.
The way I see it is, frankly, you're taking money from one pocket, moving it to another, but the money is still moving around because the homes are still damaged. I think the only way you really solve for that is you remove or mitigate or reduce the damage, because whichever pocket is holding the money, I don't love that outcome. What I'd rather there be no necessary pocket because the properties survive the weather event in a much more robust fashion. I'll give you an example. Some of the hurricanes that went through Florida over the last few years, I guess it was the 2024 season. We had three different hurricanes that impacted our portfolio in Florida. Now, our portfolio in Florida were only newly constructed homes. It had strong building codes. The trees were, 6 feet tall instead of 60 feet tall. And so when you looked at the model damage versus the actual damage, it was about zero point 0.3, our actual versus modeled in a legacy community. And the
Wow.
reason it was is that the homes withstood the damage. So we actually have our chief claims officer lives in a neighborhood that was just north of a Lennar new construction community. And then we have our chief reinsurance officer who has a home in a community just south of it. Both of their communities saw a lot of damage. The Lennar new home community saw virtually no damage to
Yep.
that community. And so I really do think shifting the paradigm, not just shifting the dollars, what pockets they go to, who makes the money, who spends the money. I think that really is what I think is a favorable outcome. In the meantime, it's going to be messy while this all gets
Oh
sorted
yeah.
out. But
Always
I
messy.
think that's the long term. That's the only way you solve this in the long term is you build a cinder block house that's massively resistive to all these things, and you put some kind of beautiful, beautifying exterior finish, but it's still a cinder block house. I think that's the solution.
Yep, yep. Yeah, it's so interesting, Rick. I have people that I talk to all the time around the industry and going to conferences that talk about these mass events like the wildfires in Southern California. And how could this happen? How could this? It's actually very clear how it's happened. And when I talk to people about what climate's doing to the industry right now, I tell them all the time, like, look, we have the means to protect ourselves against all of these things. You can build a house in a Cat 5 prone, get 160-mile-an-hour wind, and the house could have no damage. We've already seen these houses. IBHS Insurance Institute's been putting out these guidelines for years. I hope, we will see private investment money actually go into startups that are looking at resilience and fortification. That's the piece that I'm kind of holding out my most amount of hope for because the problem we have, unlike new home builds with Lennar and others, is unlike the auto industry, just homes don't turn over fast enough, right? So there's a major retrofitting issue that we need to solve before anything else. I think what new homes have done is they've proved that meeting these codes, the home is survivable, right? So now it's how do we take some of those learnings and actually input them into the old construction that's all over the country. And for you guys, I would imagine it's a much bigger risk being in the homeowner space, obviously, because that's the group that takes these on the chin every time these events happen, right?
Yeah, no, fully agree.
Yeah. Super interesting, man. Super, super interesting. So I'd love to kind of go into the future from your mind. Like, where do you see the homeowner space in 10 years, right? With all these different things, with AI advancements. And usually I'm not one to be like, oh, what's the future vision? But, I feel like with your background, Rick, and understanding of where things are going, and maybe this is you just talking about where do you see Hippo in 10 years? Take it however you'd like.
Yeah, no, look, Mike, it's a great question. And I really think the way we're thinking about it at Hippo is home insurance is not home protection. Home protection is holistic. Home insurance reimburses the homeowner for damage that occurred from some type of an event, whether it's weather related or otherwise, right? To me, home protection is home insurance plus home warranty plus proactive preventative services to mitigate or reduce the need for home insurance and the need for home warranty. So what we're really building at Hippo over time is the idea of if Mike Gula wants to protect his home, have one partnership that can help protect the entire gamut of your home. So it's kind of you remember we used to joke about this, but it's becoming more of a reality. 1-800 Hippo.
Yeah.
Anything with your home, 1-800 Hippo. We'll take care of it for you. The customer didn't want to say, is this a warranty coverage or is this a warranty claim or is this a homeowner's claim? Because the two companies are going to be fighting it out, right? We actually saw a case not too long ago where there was a lightning strike and the insurance company was saying, well, we don't fix people's fried HVAC systems. And the warranty company was like, well, this was from a lightning strike. That's an insurance claim. It got resolved, but it was still created a lot of friction for the customer. So to me, it's more about holistic home protection, and not just home insurance that's reactionary.
Yep, yep. It's funny. I think back to the name you used to always tell people about Hippo. What does Hippo stand for, right? And I rebranded it in my head because I've actually talked to some folks on your team about some of the cool products you guys are working on in the home space with the home warranty. And Hippo Insurance provides peaceful ownership, right? That's what I feel like you guys are trying to get to with this whole entire thing.
I think for the homeowners portion of our business, I think that's spot on.
Yeah, that's great. That's great. Well, Rick, I'd love to, end on a last Hippo question around Spinnaker, right? You guys have been doing a lot of stuff there. Seems like everything has been going amazing. The company's all over the place. I know you got an incredible team that's been doing some really awesome stuff there. How do you see that pivot kind of impacting the overall for Hippo now with what you guys have been able to do with the Spinnaker partnership and what you guys are doing there?
Yeah, look, it's really holistic. So one, I believe firmly that most innovation comes to the insurance industry through the form of MGAs. It's people thinking a little bit outside the box. Look, all of us, humans generally, once you get comfortable doing something, you kind of just plod along and do the same thing over and over again. There has to be an influx of new ideas. And I think for our industry, that comes through MGAs. And so what's the two things that you need when you take the MGA, when you want to bring an MGA into market? Well, you need paper, right? You need some kind of, regulated AM Best paper generally, or surplus lines paper, even if you don't need the regulated paper, but you need paper. The second thing you need is a partner to take risk
Yep.
because these innovative startup ideas, they don't have the balance sheets to take, a lot of underwriting risk. So you need those two partnerships. What I get really excited about what we're doing at Spinnaker, and we just announced we now have 36 different MGA
That's awesome.
partnerships on our
Yeah, congrats
paper.
on that.
And many of those we participate in risk. So we help them with the two different aspects of necessary to get it into the market. But to us, it's very much how do we help companies get into business, or how do we create more capacity for existing companies? And oh, by the way, uh, by participating in risk across a wide variety of insurance perils, not just home, not just auto, but all the way across the gamut, small commercial, cyber, commercial multi-peril, pet, you name it. The more I can do things across various perils, the more diversifying my portfolio is. Therefore, I can grow the Hippo home insurance portion even faster because I have a further diversified portfolio beyond a single product line and geography. So it really is symbiotic that we help these programs get what they need. They help us get balanced, diversified exposures across the taking portion of our business. And it really is a win-win. And so we're really excited about the growth that our partner program team over at Spinnaker is doing, and we anticipate that to continue to grow.
That's awesome. That's awesome. Wow, Rick, this has been great, man. I got to end on one question. I miss all of our movie line quotes that we used to do, so I've been dying to ask you one question and see you'll know where it came from. But who's a better golfer, you or me?
Oh, well, that you are, Mike, because I work for a living.
I haven't golfed
So
since I started adaptive, man. Believe me, I feel your pain now. I feel your pain. I feel your pain.
yeah, when I become a better golfer, that's because I don't have to work as hard as you do, and you're starting to feel it because hey, look, the great thing about being an entrepreneur is you get to work whenever you want. You just better want to work all the time.
All the time.
And
All the time.
so, yeah, I mean, you've been doing startups now for a long time, as I have, and there's not a lot of time to golf. I'd like to spend more time golfing, just not a lot of time to do it.
Same, man. Same. Well, Rick, this has been great, man. I could talk to you about all this stuff for hours. Super grateful for the partnership working with you. I appreciate you taking the time to do this. Hopefully, for all of our listeners that are going to listen to this podcast, pay attention to groups like Hippo. They've done some amazing things. They're going to continue to do amazing things now as a public company and kind of the InsurTech 1.0. And now all of us coming after now is just trying to learn from the past and do better in the future. So, Rick, thanks again for being here, man. Super appreciate it.
Mike, loved it. Anytime.
Awesome. Thanks, brother.